started in the morning to teach. My name is Ahmet Tekelioğlu. I'm a research fellow at the center, and I direct the Meydan project, the center's digital scholarship program. And hopefully I'll be bothering many of you to get your piece for Meydan and different modalities. Our first speaker for this panel is Dr. Abdul Karim Aldohni, lecturer, an associate professor, in other words, in financial law at Newcastle Law School, Newcastle University in the UK. He's a fellow of the Chartered Institute of Arbitrators and a senior fellow of the Higher Education Academy. His research focuses on financial law with particular emphasis on ethical finance, Islamic finance, consumer credit and consumer protection, and financial technology or fintech. He's currently working on his third monograph, The Law of Islamic Finance and Fintech, which is under contract with Oxford University Press and scheduled for publication in the final quarter of 2026. Two other speakers for the panel, Ahmet Aysan and Kabir Hassan. Professor Aysan and Hassan, I'll introduce them as we invite them to speak. Professor Aysan.
Thank you very much. Thanks for the introduction. Good afternoon, everyone. I am going today to talk about the use of fintech in the context of Islamic finance. I've looked at Islamic finance over the last 18 years as a full-time academic in different legal and regulatory contexts. And recently, with the sort of growing interest in fintech, a lot of participants in the Islamic finance industry started to engage with different products. So what I'm going to do today is to look at what we mean by fintech, and I'm going to focus on the decentralization aspect of it. We heard from our speakers this morning elements of AI, the automation part. So when we say fintech as a term, it's been it has become a buzzword recently, but we've always had fintech in finance. ATMs are fintech, using your sort of online banking is fintech, but recently there's a trend associated with sort of advanced digital technologies. So as a term, it's a broad term, but recently it's been pretty much associated with advanced technologies, digital technologies, automation, big data, AI, chatbots, bank using sort of automated devices or means to communicate with customers, decentralization, disintermediation, which effectively the peer-to-peer lending, let's get rid of the bank or financial institution, let's have a connection between those who can lend and those who need the money. And then kind of a sort of a product of both, which is open banking. And by open banking, we're talking about the use of automation, big data, and disintermediation to provide better products for consumers. For example, allowing banks to share data with third parties, obviously with the approval of the sort of consumer, to provide them with a sort of a better budgeting plan. So these services would fall within open banking. Your Apple Pay is open banking. This sort of easy interface and easy payment method is based on open banking. But my focus today is decentralization. And so primarily crypto finance, blockchain as the sort of byproduct of this invention, and smart contracts. So decentralization depends on creation of a new ecosystem in which high advanced digital technologies use. I'm not a computer scientist, I don't make that claim. I tried my best last summer to have a better understanding of how these things work. I have basic understanding, but primarily is finding ways to create a secure ecosystem in which you don't rely on third parties to conduct certain services that you originally, in conventional finance, relied on banks, financial institutions to provide these, central banks to provide these. Primarily, we're looking at cryptography and hashing, which is to create sort of put big data number, sort of algorithms, complicated algorithm structures, and digital signatures, private key and public key, to ensure that there's no double spending of this sort of particular token. So two key functions that's been revolutionized by decentralization. First of all, issuing of currency. That's been always something that the central banks reserved to issue the currency that is used for transactions. So that's the first thing that's been revolutionized by decentralization, and keeping a record of the transactions. That's something that's been done by banks in terms of recording transactions and who paid what, and ensuring that that money actually went out of the person's account. So these two functions were both replaced by this new ecosystem in which the currency does not require to be kind of printed or to be issued by a central bank. It's the work that takes place by those who contribute to that ecosystem, so that will eventually lead to maintain this currency in principle. And instead of relying on third parties to record transactions, those who are participating in this process will record this. And the lack of centralization would give these sort of transaction level of anonymity that they never had before. This is not a sort of a new idea. It's not something that just happened recently. CryptoPunks in the late 80s were a bit concerned about the sort of big brothers and the big corporation looking at what we spend on and, you know, targeting us with the constant ads and so on. And so they wanted to create a system, anonymous system, where you, as a consumer, you don't provide your identity in terms of the spending, the use of the money. So that then later in the early 90s produced DigiCash. I don't know if you're familiar with that. So DigiCash was a system that provided the level of anonymity, I would say, because you're still relying on software where obviously operated by an institution to create that sort of level of anonymous transactions. However, it did not work out because of the lack of the level of infrastructure. At least that's what literature suggested, until Satoshi Nakamoto, the sort of assumed person, which is probably not the case, came up with the idea of Bitcoin, utilizing cryptography constructions, hash a digital signature, and created this sort of ecosystem that we know as, obviously, the blockchain. So the blockchain is, to an extent, is the byproduct of Bitcoin, where these two functions that I talked about earlier were replaced. Individuals can work to produce or to issue, mint the currency, and then any change in that sort of use of the currency or the ownership will require the contribution of all those who are available on that network, the open network, as it were. Now, how Islamic finance fits within this? As I said, the industry's been quite keen to engage with new inventions, to be competing with conventional finance. So it's a question here whether we can really embrace in the Islamic finance industry decentralization and its products, its ecosystem, or that would be questionable. Now, probably you're familiar with that, but there are some key principles based on Islamic law upon which the whole idea of Islamic finance is based, and Islamic economics. These two principles are the prohibition of riba, which is what we understand as a conventional interest, or at least there's consensus with some disagreeing scholars. But generally, it is the prohibition of interest. And then what I think is more relevant to our today's discussion is the prohibition of gharar, which is, I mean, again, this is a very kind of simplistic definition. It demonstrates excessive risk and uncertainty, which makes it akin to gambling, which is prohibited. So it's a major concern when it comes to our discussion on crypto finance. So in order to consider, understand whether we can embrace crypto finance and decentralization, we need to understand the parameters of what qualifies as mal, which is money, assets, that's the Arabic word, and then see how mal fits within the use of, when we refer to mal as money, does it fit within that cryptocurrency, or cryptocurrency fits within that definition of mal? Whether when we look at commodities, financial assets, would crypto assets actually fit within that definition? And then when we look at another type of assets, which is non-fungible tokens, NFTs, would they fit within the parameters of man? So starting with the idea of mal, i.e. money in this context, and its relation to cryptocurrency, whether cryptocurrency can be can fit within that. So the definition of money, or the Arabic word of money, is nuqud, that's the plural. While we use in Arabic the word amla to refer to currency or local currency. So money in Islamic economics has evolved similar to conventional money as a medium of exchange. We have gone through the phase of commodity money, which is gold and silver. The value is actually in the metal used for the currency, and in the early stages of the Islamic Caliphate, Khalifa Omar's fixed the weight because it's significant to the value of the money. And then we've gone through the development of fiat money, which we understand to be sort of the banknotes. And in Islamic economics or finance, there was fulus. Fulus is the equivalent of fiat money, where they were minted not in the valuable sort of form of metal, gold and silver, but they were minted by using copper and lead. So when it comes to what qualifies as money, I mean, we've got the economics sort of take on that. There'll have to be medium of exchange, a store of value, and it will have to be unit of account. So these are kind of the three key features when it comes to what could be considered. Islamic sort of scholars, majority would not disagree with these sort of, if anything, will agree with them. And they came up with these classifications, two qualifying features in mind. First of all, intrinsic monetary value, and more importantly, it's a measure of value for any other items. And that's my kind of explanation of the word al-thamaniya. So it means, what thamaniya means, or al-thamaniya means, it entails that money is a unit of account used to measure value and price. So in itself, measure the value of price of an asset, an item, commodity, and so on. And it is obtained primarily for that purpose. So in itself, it's not a commodity, rather it is used to measure that value, that price. So these are the qualifying features. Ibn Taymiyyah also talked about the use, and this was discussed basically in the context of fulus, because we moved from commodity money to kind of fiat money. So fulus, it was the focus of this discussion. So Ibn Taymiyyah talked about material should not be prohibited, understandably, and it must be a measure of value, i.e. itself provides the value. You don't need to convert it to another currency in order to provide the value. And then you have as a stable storage of value. On this last point, I think it's important to mention here that what Ibn Taymiyyah had in mind is the role of the sultan in providing that stability. So there is an element of there's an element of role of the state in minting to provide that kind of storage, the stability of the value. The problem that I can identify when we look at cryptocurrencies, they need to be converted to another currency in order for them to function as a means to facilitate an exchange, you need to convert it into euro, dollars, then you can give a value for something, for any item. And that itself means that it fails one element of the al-thamaniyah. And then there is the volatility of the market of crypto, which creates a further problem related to what I talked about earlier, which is the gharar, the uncertainty, excessive risk that makes it akin to gambling, which is prohibited. And finally, it's the question of widespread acceptance. This social norm that we have for fiat money, it's part of what Ibn Taymiyyah considered important. It's the role of the state to create that social norm. It's the role of the state to create the convention of using the sort of fiat money that provided it with the, or qualified it to fit within the meaning of the money. So in my opinion, when you look at cryptocurrencies, I question from even conventional point of view that there are currencies, but even more from an Islamic point of view. Then that means when we look at mal, that means commodity or financial assets, and how crypto assets weather in this discussion or this context. Now, again, from an Islamic point of view, for commodities, we have to look at qualifying features. Commodities should have intrinsically beneficial sort of feature to them. We talk about gold, talk about some harvest, talk about silver, oil. These are all commodities that they themselves have intrinsic beneficial sort of value to them. And they are connected to reproductive economy. Now, this cannot be the case when it comes to Bitcoin, obviously. And if we're going to look at crypto assets as a financial assets, like normal shares, I think here we've got to be careful because initial coin offering has some similarities when it comes to issuing equity securities. However, there are things that are associated with initial coin offering that makes it a little bit challenging to accept it. First of all, it's some of them for products that have not yet existed, for a project that have not yet existed, which means there is an element of error. This is something will have to be addressed by ensuring the certainty of future existence. That's what scholars on the basis of use of istihsan, which was mentioned this morning, which is choosing the better, the more fair, just option. So there is an element here that something that needs to be done when it comes to issuing this sort of equivalent of sort of assets or equity sort of shares. The other thing is that sometimes those who have this blockchain project have a separate company on the side. What you're buying in when you have the initial coin offering is you're buying in the shares in that blockchain project rather than the company, which again, the whole idea of allowing or scholars accepting sort of the equity shares or sort of equity securities is the fact that you have tangible ownership in existing company. The other element or problem is corruption, facade, viciousness. And when I say that, I primarily mean the use of electricity associated with mining, and even when so this is what we talk about the model of sort of proof of work. Even with the proof of stake, there's also potentially some elements of corruption when it depends primarily on luck and having higher stake, which gives you sort of a higher chance in securing or becoming the person that verified the transaction and received the coin. So that leads us to the last point here, which is the NFTs. Now, NFTs, probably you've come across them. They became quite trendy in early 2020s. But basically, they can be defined as a digital representation of an asset in the form of digital token that is linked to that specific underlying asset. Now, this is a very broad definition that can lead to anything could be turned into an NFT. Anything can be tokenized. This receipt could become a non-fungible token. It's a unique receipt. I got it when I bought tickets for the cinema. And I can tokenize it, I can turn it into an NFT. It's a question of who would buy it because there's the nature of the asset attached to it is of no value whatsoever. So there's a range here. I can have this example, or I can give you an example of a valuable sort of painting where you can't afford to buy the whole of it, but you can buy a fraction of that in that token. So I don't think there's a clear cut here. I can't see how this is something that we can. I think there's a more way to look at NFT as possibly something that Islamic finance can work with, and so there's potential there. That's the point. Now, this is sort of NFT based on digital art. I'm not questioning digital art. Digital art is great. Saks proved that this morning. So I'm not saying this, but itself is an art. So it can be treated as physical art. Now, there are like more clearer cut issues. Like when you look at the Bored Apes, we've got a digital art, you have certain rights attached to it. But when you look at CryptoKitties, which is a game where you have a cat that you breed in the game, there's a question of to what extent you, I think I'm out of time, just a couple of minutes. So to what extent you can use that yourself or can be qualified. So the questions that we'll need to ask here, three main questions. What the nature of the underlying assets? If this, then that is of no value whatsoever. This NFT does not fit within our understanding of qualifying assets for from a Islamic point of view. But if we're looking actually at actual digital art, serious digital art, we're looking at tokenizing that, then it's a different question, right? And the other question, the second question is, what's the connection, the ownership? This is something important because you need to have rights for the transaction to become a valid transaction from an Islamic point of view. So if you don't have a right to the underlying assets, then that's not acceptable from an Islamic point of view. So for the Bored Ape, you do have a right. You know that you own that digital image. They have the copyright, but you have full right of commercialization. So you have a license. From a legal point of view, you have a license. So you have right attached to it. While in, for example, NBA moments, you're basically buying a string of data that is related to a video of a slam dunk, for example, and technically you can watch it for free on YouTube, but some people paid hundreds of thousands to get that NFT of that slam dunk. So it's just the craze, it's just the nature of that sort of sort of the traders. So again, that would not fit within the sort of Islamic context. And finally, how the owner paid for the NFT, and that's where we, if it's paid by digital currencies, paid by Bitcoin's volatility, the question of uncertainty. So that leads us to the final question, the last sort of slide. If we can work with NFTs and we can use the parameters to decide or to make it fit and make it sort of Shariah compliant, the bigger question is why we need to do that. Is there any more beneficial thing to achieve beyond that? And that links to the broader discussion in Islamic finance, which is, are we achieving the objective of Islamic law, objective of Shariah, or is it just we're trying to comply? So I think in the literature, some talk about halal and tayyib, because halal is one thing, and you achieve it, then there's the level of compliance. But then the tayyib is the sort of maqasid, objective, achieve the better, more inclusive economy, more availability of assets or allowing people to invest in a more halal way. That then the question. Thank you very much.
Thank you, Dr. Aldohni, for this fascinating presentation. I'm always like, we academics are often without money, so we don't deal with All right. Our second presenter is Dr. Ahmet Aysan from Hamad bin Khalifa University in Qatar with a paper titled Rooted Futures and Multiplex Ethics, a Rooted Futures Approach to Technology, Technologists, and Islamic Finance. Dr. Aysan Is a professor and associate dean for research at Hamad bin Khalifa University and the British Academy of Sciences, Tuba. He previously served as a board member and monetary policy committee member at the Central Bank of the Republic of Turkey, and he has also consulted for prominent institutions, including the World Bank, Oxford Analytica, and the Central Bank of Turkey. His research contributions have earned him multiple awards, including the Islamic Economics Research Award from ICAM, the Arab FinTech Forum's FinTech Researcher of the Year Award in 2023, and Hamad bin Khalifa University's Research Excellence Award in 2024. He is also a recipient of the Boğaziçi University Foundation's awards, as well as several other awards. Dr. Aysan is a research associate at the University College London's Center for Blockchain Technologies, a research fellow at the Economic Research Forum, and non-resident fellow at the Middle East Council on Global Affairs. He also finally chairs the MENA chapter, Academy of Sustainable Finance, Accounting, Accountability, and Governance. Dr. Aysan, it's a pleasure to welcome you. We're sorry that you couldn't join us given the ongoing development, but we're happy to see you on screen. I think we also want to test your screen share, but if you prefer that one of us try to advance your slides, we can also try it.
It's okay, I can share it, I guess. Thank you very much, Dr. Ahmet. Thank you very much for the very kind introduction and invitation. I wish to be there. It's close to my University of Maryland College Park. And we have very good memories at George Mason University. Unfortunately, because of the recent events, we couldn't come because of the flights and some restrictions on the business trips. But Alhamdulillah, it's good to be online at least, and hope to have more of this future-related conferences for the Muslim world, because this is one of our targets also in the research. There is a new literature emerging, especially on forecasting the future. There's a big literature already on forecasting the asset prices, but this forecasting is mostly done for shorter term periods. Right now, there are lots of global uncertainties, and we are much more concerned, not just the Muslims, but everyone is much more concerned about the future. That's why we have to think more about the future, and there's a new field emerging, especially how we can design the future, not just try to have kind of a post-fact analysis where we assume that the past will be repeating in the future. Right now, we are much more into the designing the future kind of a paradigm in academia too. We closely follow this literature and we try to contribute. This is in one of our mandates in our research strategy plan in our college, because we also believe that the Muslims do not necessarily, sometimes stuck in the past, oftentimes stuck in the past. We talk about some of the big achievements of the Muslims in the past in Andalusia, in the Ottoman period, and so on. But when it comes to the present time, we are relatively irrelevant, or especially in designing the future, we do not spend enough efforts, enough investment, and the intellectual effort also. So that's why I really value that when I see that you're working on the Muslim futures, I said we are on the same page, and hopefully we can collaborate more in the upcoming years in person too. I have been working on this presentation for a while. It's also a good opportunity for me to put my ideas into the pen. In today's presentation, first I will talk about the need, why we need to think more about the futures. And I'm not going to refer too much to the Islamic texts and the current Islamic discussion in Islamic economics, because these discussions are relatively not very well developed. So I will refer to the first, why we need to work more on the futures, increasing uncertainty. And I will give some examples from the recent big tech entrepreneurs. And I will try to show that ideas, the intellectual views actually shape their entrepreneurial skills, and then they shape the world. And this is very much of a criticism sometimes done for Islamic economics. Some of the Muslims even do not think that there is no subfield as Islamic economics. But by showing this, I want to show that Islamic economics is also idea-driven or kind of an ideology-driven. First, the ideas comes and then the action follows. And we see exactly the same thing for the recent tech entrepreneurs like Peter Thiel, like Elon Musk. So I will give examples just to also support the idea of Islamic economics, because there's a big discussion right now going on in Islamic economics. It is as if we don't have the big global thinkers to shape the Islamic economics. It's as if Islamic economics come to a stalemate, and then it is not developing. There is such an argument, which I do not agree. So that's why I will make some resemblance with that, and I will put the term of conscious economics, and I will try to explain this term. This conscious economics is more individually driven, more liberal approach in Islamic economics, and then I will try to relate it with the multiplex idea of Recep Şentürk towards the end, if I have time. So this is my plan. So let me share my slides very quickly. Okay, it came up, I guess. Okay. Let's go back. I guess you see it, right? Is it visible? I guess. Okay. So I name it as conscious futures. I am in between the conscious futures and the rooted futures. And at the end, I decided on the conscious futures because of the reason I will explain in a bit, because we need to discuss more about the consciousness. And it will be one of the major challenges, especially at the age of AI, whether the AI can think, whether they can have a conscious, how we define the conscious, and so on. This is not just a philosophical discussion, but this is the way how we approach the world. And I believe it will be very relevant in thinking about the Islamic economics too. First, I would like to start why the world is changing and why we need to pay even more attention to global changes. First, actually, after 1980s, Muslim countries somewhat disproportionately benefit from the globalization. What they need to put into the global financial system, global economic system, was their labor power. They had the cheaper labor power, and in early 1980s, the global north needed cheap labor, and they have invested in developing countries, and that's why Turkey, Bangladesh, Egypt sort of countries became part of the global economy, and they become relevant for the global economy. But now there is a big challenge. First of all, because of this 3D printing, because of robotics, and even more importantly, AI-related developments, because this 3D printing industry 4.0 has been around for about 20 years now. But this AI enhanced robotics and 3D printing brings us to industry 5.0, which the developed countries anymore do not necessarily need labor. They can invest in this AI technology and robotics, and they can completely ignore developing countries. And this is part of even the discussion in US, right? Because this kind of a trade wars, tariffs, and so on, they rely on the assumption that we can produce everything now anyway. We don't necessarily need China. We don't necessarily need other developing countries. So this is a big change, and this change is mainly coming from the technology. And it is very likely to affect the global politics. Right now, the Muslim countries, instead of having a comparative advantage in their cheap labor in the global economics, now they are standing out with the cheap energy or with their energy-related endowments, or even more importantly, recently they are coming up with the rare earth minerals. For example, in Afghanistan, in Indonesia, in many Muslim countries, they have relatively unexploited rare earth minerals, and big tech companies and the developed countries have a big interest on this rare earth minerals. But this completely brings us a different sort of approach to these countries. In the past, when you have an industrial production, textile production, when you need the cheap labor, you want to have more democracy, you want to have more governance structure where each and every part of the society will be incorporated to the economy. But when it is more natural resources abundance, then you can just control handful number of people in the respective country, and you can extract the resources. So you do not necessarily need Washington consensus, post-Washington consensus in the new era, as opposed to the 1980s and 1990s of the post-Washington consensus world. So, and that I believe this is the most important thing, which is sooner or later, and it is even now probably affecting the Muslim countries, because most of the Muslim countries are living in global south. They are relatively poorer, and this US, and they are in between the US and China tension. And the rare earth minerals are going to be even much more important. But again, this extraction of the rare earth minerals brings the different form of institutions and governance structure. That's why I believe that the techno-feudalism argument of Yanis Varoufakis is somewhat related with our argument. He claimed that this platform companies, the big tech companies, are actually killing the markets. They are not. They are kind of anti-capitalist movement. So capitalism is feeding the destruction of its own through these big tech companies. And he wrote a very interesting book back in 2023. And then he resembles like the East India Company, like the big tech giants of today. So there's a form of colonial extraction in the form of data and resource extraction. And the small feudal elites of the past is resembling the tiny tech funders class. And when we look at the market value of these companies, they are in $1 trillion, not even in $1 billion number. And the founders also are quite rich. And even more importantly, this similar to the East India Company, this big tech companies directly negotiate with the countries. For example, Microsoft signed a nuclear deal, 3 Mile Island restart, and the Alphabet and Amazon secured long-term rare earth supply chains. NVIDIA AI chips requires cobalt and lithium, and they made some efforts for securing this cobalt and lithium. So they need to extract the resources of the developing countries, and they do it even directly, and they are even much powerful than many of the small states in their wealth, in their political power. And when we look at their funders, they are in billionaires. So but even more importantly, they are billionaires, but they are different sets of business people. They are not like the Carnegies of 20th century or Rockefeller of the or the fourth of 20th century, or they are more like the fourth of 20th century because the fourth has this ideological perspective. They seem to have certain ideologies. They are not just profit maximizers. They are not just for profit, but they really want to change the world. And among this, I would like to give an example from Peter Thiel. I'm sure you are all familiar. I'm sure some of you might be thinking what is the relationship of Islamic economics with Peter Thiel, but I believe that Islamic economics have started with the ideas. And this guys, especially Peter Thiel, has an idea in the first place, and then he made his fortune, his profit maximization later on. Even when he's a philosophy graduate from Stanford, he studied law. And he established the PayPal as an not for profit only. He was trying to generate a world where we will not rely on the bank. He is still claiming that we need decentralization. We need some independence from the state. And the PayPal was like that, because the PayPal was eliminating the banks. You can put your money to the PayPal and you don't need the banks anymore. So there could be much more decentralized decision. And it goes back to early 2000s, imagine. And then he start making his money together with Elon Musk. And Elon Musk has the same idea. So their ideologies are quite dominant in their entrepreneurial skills. And I believe that Islamic economics is somewhat like that, because Islamic economics start with some ideas. Unfortunately, we don't have this sort of a very big billionaires, but we have some individuals who contributed to Islamic economics, first starting with the ideas, like we can give example of Al Baraka Group, for example, they started with the banks and then they spread all over the world with their Islamic banks. But one major ideology matters, and the Peter Thiel is a proponent of the libertarian, anti-globalist, and technophily sort of an entrepreneur. He may not be admired person in many regards. He is the founder of Palantir. He probably is doing something that is not necessarily completely libertarian, especially with the Palantir. But what he is doing in terms of why ideologies might matter, and then this 21st century entrepreneurs are quite radically different from the many of the entrepreneurs of the past, where today the ideologies and ideologies of these entrepreneurs will shape the world, and they will design the future, and they are already designing the future more than many of their predecessors, many of the politicians of today even. For example, Peter Thiel have invested in many of the good enterprises, including Facebook, including PayPal. And he has been working also on anti-debt mission. He is spending money on anti-debt and the longevity related research. And even more importantly, he is not just an entrepreneur, a business person just spending his money, but he is also a political kingmaker. He is one of the early person in 2006 campaign, openly supporting Trump, and even he somewhat made J.D. Vance as the vice president. So also Alex Karp is one of the founder of Palantir. They are coming from the philosophy background. They studied together at Stanford, and Alex Karp is a student of Habermas even, and he studied in Frankfurt. Even though again what he is doing in Palantir is not probably as the critical theory will be quite supportive, but he knows what he is doing for sure. So, but my point of bringing this ideologues, entrepreneur is that the ideas matter, and ideas are going to be even much more matter in the designing the future, and especially in economics. Many of the economists were strong in social sciences because their analytical skills. They do some econometrics, they do some data collections. I believe over time, all these things will be done by AI tools, with clouds, with ChatGPT sort of tools. But what will stand out is that our normative views, our ideologies, our ideas will be much more important. In that sense, I am quite hopeful about Islamic economics, for example. Some people say that Islamic finance economics came to a plateau, we don't have new ideas. But I think the other way around. Right now, the economics with ideas, economics with some normative views will be much more important, including the ecological economics, including feminist economics. This sort of more normative disciplines within economics will be much more important than just more conventional economics, which relies on more problem-solving and analytical skills. That's why analyzing these entrepreneurs and showing the importance of ideologies and ideas is, I believe, is important. For the Peter Thiel, he doesn't believe in the humans that much. He is more elitist, or in a Straussian sense. He believes that all human all human desire is imitative. Societies escalate rivalry until scapegoats is sacrificed. Thiel sees tech monopoly as a way to escape mimetic competition entirely. You know, he recently had this anti-Christ meetings in different parts of the world, including in Rome, where the Vatican is. And then he propagated this antichrist as the state, and especially this techno giants, where and the regulation of the states preventing them to further develop, and the states may be the main hindrance for progress. So he has this sort of a libertarian view, and then he considers the Antichrist like the state trying to prohibit the further progress. And similarly, Habermas' view of communicative rationality is seen in carve. But in any case, these are intellectual entrepreneurs, and then they seem to be reflecting their ideas one way or another in their enterprises.
Fark hocam, we have a physical 5 minutes card over here. I can show it. But
Sure. I will be very quick. And then they are investing heavily on debt-related research. They want to increase the longevity. And then similarly, we have another example, one of the bestseller, Yuval Harari. He's emphasizing, he wrote the Homo sapiens, even to be able to write the Homo Deus. He is now talking more about the future. And his main claim is that we don't have consciousness, we don't have conscious, and the humans are not different from just the data points. I will not get into very much of a detail, but his argument is that free will is an illusion, self is a narrative, feelings is just data, and the humans are hackable. So I'm sure you listen him in the Davos meetings. He's a permanent kind of a speaker in the Davos meetings, and his videos are everywhere. But overall, the idea is that we can kill the deaths, and then we can increase the longevity. Why these are all matter for us? Again, the ideas matter. So Islamic economics matters. We don't have just conventional economics, because even now, many of the conventional economists do not believe that there is no such thing as Islamic economics. There's an economics, and that's it. But we believe that normative approach, one way or other, our principles, our worldviews matter. And there is no better place than seeing this in Islamic economics. Islamic economics, many people have some criticism about Islamic economics, but I have an argument that in the last 50 years, if there is anything that the Muslim world has achieved, it is probably Islamic economics. Out of nothing, right now we have banks, Islamic financial institutions, we have universities, curriculums, and so on. And that's why this is something I believe we should applaud, that Muslims have one way or other contributed to the world civilization. I will not get into detail, but overall, Islamic economics so far was mostly more of a following a more top-down approach. In 1970s, the politicians, regulators, intellectuals come together and they say that, okay, we will have an Islamic development bank, we will Islamize our economy, and then they start imposing, or they start introducing Islamic banks. But this time is over. Right now we have much less popular political Islamism. Islamization of knowledge and the top-down agenda has stalled in most countries. Form over substance discussion, the Sharia boards, rubber stamp products are being criticized. And there are also certain macro injustices like hyperinflation make the Islamic labeling quite irrelevant in many of the developing countries. And in most of this discussion, customers are excluded from the design, and individual Muslim conscience delegated to the institutions. Once you have the Sharia board approval, it's as if everything is solved. So what I am proposing that, and that's why I have been working on fintech topics over the last 10 years, because I have seen this development, and I believe that the future one way or other is on consciousness and the fintech. We need more of a bottom-up approach, where not just the state, not just the regulators, but the customers, the end product users of the Islamic financial markets have to be conscious, and they have to demand the product. And we already see this, especially US is a good example for that one. For example, White Invest is operating as a robo-advisory company. Yielders is a crowdfunding company. There are peer-to-peer lending companies. There are mortgage companies, investment companies. So, but the overall idea is that the era of top-down approach is over, and the fintech now enables the individual Muslims, whether in Jakarta, whether in London or in Michigan, to access the Sharia-compliant products on demand without government mandates or physical Islamic banks. Overall, still the future is much nearer than we think. Overall, the financial sector is changing, and Islamic finance is going to change as well. We will see more agentic AI. Our investments will be distributed 7 days, 24 hours. We will rely less on the banks. Overall, this is overall financial sector, and the Islamic finance also be shaped accordingly. There will be much more tokenization. The companies will issue their own tokens, own services tokens. There will be more CBDCs, stable coins. And the overall, instead of Islamic banking or overall the dominance of the banking, we will have much more reliance on the capital markets. And then certainly there will be stability issues and so on. But always Islamic economics, Islamic finance is not separate from the mainstream economics. We cannot say that we are living in vacuum and then the rest of the world is living on. It is other way around. Actually, we are pretty much affected by the mainstream economics more than we influence the mainstream economics. And that's why we need a new framework. And in this new framework, I propose a conscious futures, conscious economics, where in the Islamic moral economy, top-down narrative framework is very much there. Institutions define what is halal and haram, like the Sharia boards. Individual conscience delegated to the Sharia boards, pretty much. But in the conscious economics, each individual holds a final moral responsibility before Allah. No intermediary between the kul and the creator. Trust, in the conscious economics, we trust the Muslims, each and every Muslim, one by one. The problem of the Islamic moral economy or more conventional approach in Islamic economics, macro injustices make the micro level product labeling irrelevant. Like in many countries, when you have inflation rate of 80% and so on, people do not necessarily go for Islamic products. They even want to just survive in such a macro imbalanced environment. So the core principle of this conscious economics is that individual accountability cannot be outsourced to Sharia labels, fatwas, or institutional identities. Conscious Vijdan is the ultimate arbiter. I would like to give one example and then I will conclude. One good example for this Islamic conscious economies come very recently actually because of the Gaza boycott of 2023 and today, even not 25. The boycott is still going on in many countries. For example, McDonald's net profit has declined by 12%, and the Starbucks international sales declined by 7%. Just in Malaysia, KFC has closed 108 branches. How the boycott embodies conscious economics. There is no institutional comment. No Sharia board issued a fatwa. No Islamic State organized it. Individual Muslims in Indonesia, Malaysia, Turkey, Egypt, UK, and USA made the same decision, independently driven by their inner moral convictions. Consciousness over habits. Consuming McDonald's was a deep daily habit. Overriding it required deliberate moral reflection, exactly what the conscious economics demands. Economic power as a moral agency. McDonald's was forced to buy back 225 Israeli restaurants, and the Starbucks cut 2,000 jobs. There are not symbolic gestures. They show Muslims exercising real market power through individual conscious choice. And this is not just in Muslim countries, but it's spread all over the world. And overall, there was no fatwa required for this. No Islamic institution organized it. Cross Muslim majority and Muslim minority countries involved. And this is a very good example in that regard for conscious economics. And it is an example of how the top-down economics works. Another slide, I try to relate this conscious economics with the multiplex the arguments, multiplex the ethics of Professor Recep Şentürk, which I can skip this, but there are certain similarities.
Okay, I think we need to wrap in a minute.
Yes, let me conclude. First of all, Islamic economics is an ideologically driven, idea-driven thing, and we see that the future is designed by the ideologues. The future is designed by the people who have ideas to begin with. So we see this in the Peter Thiel, we see this in the new Technologists, and I believe there is even much more room for Islamic economics to shape the future. And but we need to spend more time and more investment on this. And thank you very much for this conference organization. I hope this will be a good channel to start these discussions. Thank you.
Thank you. Our next speaker is Professor Kabir Hassan from University of New Orleans with a paper titled crypto blockchain and Shariah compliance towards an inclusive digital economy. Professor Mohammed Kabir Hassan is a globally recognized scholar in Islamic banking and finance, as well as a long-standing faculty member in the Department of Economics and Finance at the University of New Orleans. He holds multiple endowed appointments, the Moffett Chair in World Resource Prize and Economic Development, Hibernia Professor of Economics and Finance, and Hancock Chair Professor of Business, and he serves as editor-in-chief of the wider journal Review of Economics and Finance. A senior Fulbright scholar, he was appointed to the inaugural Hamid Hadid Chair of Finance at IDA Karachi, and is an honorary professor at the University of Jordan. He also sits on the International Advisory Board of the University of Asia Pacific in Bangladesh. He consults for the AAOIFI, the World Bank, the IMF, and the Islamic Development Bank. Professor Kabir, thank you so much.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. So there is one good part, and that part being the last speaker. Because 50% what I wanted to say has been said by my previous two speakers. But I have 50% left. So I have to now run through two different. So first of all, thank you for this nice introduction, and also thank this George Mason University. I came here in 1984, almost 42 years ago when I was in undergrad. There's a Center for Public Choice by James Buchanan, Nobel laureate. So it was a homecoming for me. And thank you, Professor Somaya. So this is my presentation outline, but I have 20 minutes, so I'll try to cut it short. I'll cut different slides. So let me start with 4 numbers that tell the story why this topic demands our urgent attention. Islamic finance has surpassed $4 trillion globally. There are 2 billion Muslims worldwide. 137 countries are now exploring central bank digital currencies, and the blockchain market potential has been estimated at over $20 trillion, as I documented one of my paper published by Emerald. These numbers are not just statistics, they represent a historic convergence of technology and faith-based finance that will shape the economic future of the Muslim world. So this morning we talked about crypto, whether it's a halal or haram, and actually this is also Darius' question last time. The central question that has dominated scholarly discourse is whether cryptocurrency is halal or haram. Let me present both sides fairly. On the left, we have serious concern, access to speculation or maisir, high uncertainty or gharar, fahish, lack of intrinsic value, no regulatory oversight, and use for illicit activities. As Abdul Karim has mentioned this very clearly in his presentation. There is a legitimate concern raised by scholars, including Grand Mufti of Egypt and Turkey's Diyanet. On the right side, scholars like Mufti Muhammad Abu Bakr argue that Bitcoin meets Islamic criteria for wealth. It has a fixed supply like gold, making it inflation resistant like 21 million you can issue. The systems are decentralized and transparent and purpose-built, and Islamic tokens now exist, tokenization that mentioned by Abdul Karim. My own systemic review, the paper that I published in 2022, concluded that while conventional cryptocurrencies are not Sharia compliant, the underlying blockchain technology holds tremendous promise. Technology itself is not bad. It is nothing to Sharia or non-Sharia. So now, this is the diplomatic research that I mentioned. Also published in Review of Financial Economics. So what is striking is that most research focuses on market behavior and technical properties rather than ethical, religious, and socioeconomic dimensions that are most relevant to our community. This represents a significant research gap. The Islamic finance market exceeds $4 trillion and serves a community with distinctive financial ethics, yet the scholarly infrastructure has not kept pace. And this is a call to action for future research in this area. So any rigorous Sharia assessment must be grounded in the maqasid of Sharia, the higher objective of Islamic law. I've organized the 5 essential objectives and shown how blockchain technology can actually serve each one. Preservation of religion through ethical finance aligned with divine guidance. Preservation of life through economic stability. Preservation of intellect through transparency that reduces deception. Preservation of lineage through intergenerational wealth transfer via waqf. Now, any preservation of wealth through clear property rights and reduce counterparty risk. The key insight is that well-designed digital asset systems may actually better align with the maqasid objectives than the conventional interest-based financial system. Now, let me drill down into 3 key Sharia prohibitions and how they apply to crypto. Riba risk is generally low to moderate, since most protocols do not involve interest, though decentralized finance lending needs scrutiny. Gharar is the most substantive concern due to extreme volatility and technical complexity, but it exists on a spectrum and can be mitigated through regulation. Maisir risk varies dramatically. Day trading and leverage are clearly haram, but buy and hold without leverage may be permissible. The bottom line is that a blanket prohibition is not justified. Each asset must be assessed individually. Now, if we look at some of the assets that exist, Bitcoin, Ethereum, stable coins, gold-backed 1 gram Islamic coin, and this table summarizes a Sharia compliance assessment across major digital asset categories. We have checked all of this. Notice that the gradient, Bitcoin and Ethereum remain disputed due to high Gharar and moderate Maisir risk. Stable coins are conditionally permissible. Gold-backed tokens like 1 gram and dinar gold are permissible with Fatwa support. And Islamic coin is a new one on the Hack network, is Fatwa certified with its own innovative Sharia oracle and evergreen DAO charitable mechanism. This differentiated approach is essential. We cannot treat all crypto as a monolithic category. So now, let me turn to the most exciting part, practical blockchain applications for Islamic finance. Smart contracts allow automated real-time Sharia compliance through what Hack calls a Sharia oracle. Tokenized sukuk are democratizing capital market access through fractionalization. Blockchain is solving the long-standing transparency deficit in zakat and waqf distribution, as I've documented extensively in my other research. And Islamic DeFi or decentralized finance platforms are developing Sharia-compliant alternatives to conventional lending protocols through Murabaha and Musharaka smart contracts. Now, tokenized sukuk represent the most commercially significant application right now. The global sukuk outstanding volumes surpassed $1 trillion in Q3 to 2025, and issuance up 89% year on year. EDIF's Smart Sukuk in Abu Dhabi allows retail access to digital fractionalization. INA BLR in Bahrain offers Sukuk as a service on the Tekelioğlu blockchain. Dubai's DLD Vara collaboration is tokenizing real estate for asset-based Sukuk. And Saudi Arabia's Termis Capital, backed by STC, is building digital Sukuk infrastructure. So this is no longer theoretical, this is happening right now. So Islamic FinTech 4SD, we have a modern developed gearbox, is a framework developed with my co-author, provides a 5-step strategy for achieving sustainable development through Islamic FinTech. Pillar 1, simplified accounting opening and eKYC, electronic know your customer. Pillar 2, digital payment system. Pillar 3, AI and blockchain-based Islamic financial services. Pillar 4, leveraging the first 3 to deliver government services for the financial inclusion. And Pillar 5, critically ensuring Sharia compliance across all 4 preceding pillars of this promote positions technology adoption within a broader socio-economic development strategy. So technology itself is a value nature. It is not right or wrong, halal or haram, but how we use them. Now, the main problem that all this money creation, crypto came into existence, the money creation problem, and this is a fundamental problem I've been dealing with entire my adult economic life, scholarly life. Now, I want to share something from my deeper research and monetary theory that most scholars working on crypto miss. The fundamental problems in modern financial system is not just about individual cryptocurrencies. It is about who creates money. As Marvin King, the former governor of the Bank of England, stated, the fragility of our financial system stems directly from the fact that banks are the main source of money creation. Over 95% of the money in existence is created by private banks through lending. This creates a vicious cycle. More debt leads to speculative lending, which inevitably leads to financial crisis. The misty moment we talk about Islamic finance, with its emphasis on musharaka risk sharing, offers a structural alternative, and crypto and CBDC central bank digital currency with algorithm supply and blockchain transparency offer the technological tools to actually implement this alternative. Now, so how to solve this problem? We wrote a paper. We call this SFMCF model, the Sharia-based fintech money creation fee model that I wrote with co-authors. The key innovation is this: it eliminates private money creation in Islamic banking altogether. Currently, approximately 80% of Islamic bank financing is through Murabaha, is a short-term cost-plus financing, which is that contract that functionally replicates fractional reserve money creation. Our model replaces this with genuine equity-based financing through Musharaka and Mudaraba. These are the partnership form of financing in Islamic finance. Collaborates with fintech companies for efficiency, share profits proportionally, and uses central bank digital currency for interbank settlements instead of fractional reserve. Islamic banks become genuine financial intermediaries, not money creators, and this is a fundamental structural reform, not just an incremental improvement. Now, let's look at this OIC and the high-income countries. These numbers should alarm us. Account ownership in OIC member countries stands at just 41% compared to 92% in high-income countries. So that is 51% point gap. Actually, it should be 59. Moreover, the percentage citing religious reason for not having a bank account is 5% higher in OIC countries, indicating a distinctive role for Sharia-compliant fintech. This opportunity enormous. Fintech can lower financial service costs by 80 to 90%. The global Muslim population comprises more than half of the under 34 demographic worldwide, a digitally native generation. They are digitally more savvy than the rest of the world. So Islamic fintech ecosystem is already taking shape across all 6 financial dimensions. In funding, we have Pay Halal and Amal Pay. Professor Aysan talked about this as well in Malaysia, and Bank Negara's investment accounts platform. In financing, HS Crowd operates across Singapore, Indonesia, and Malaysia, while Blossom Finance issue blockchain sukuk. In capital markets, Adopt Solution offers a crypto exchange. Hello Gold provides blockchain-based gold investment. For wealth management, Wahed in the US provides Sharia-compliant robo-advisory. And F-Asset offers asset-backed tokenization. In Takaful, this is another big industry. In Takaful, uplift mutuals and ensure halal are decentralizing insurance. And for zakat and waqf, hacks, fairs, platform, and all plus blockchain distribution models are addressing the transparency deficit I have documented in my research.
No, 2 minutes.
Oh. So these are the 9 research gap in crypto from the Islamic finance perspective that I mentioned. So, well, I have done many work. So there is one thing I want to say about the central bank digital currency is are particularly consequential for Muslim majority countries. The UAE aims to launch a retail digital dirham by 2026 as part of the cross-border MAC-based project. So central bank digital currency probably in the right direction. So when we talk about in order to avoid the fractional reserve, we need a currency that settles one of the main issues who controls the money. And if you read the monetary history of the United States, even Abraham Lincoln was assassinated, connected with this central bank creation, the private money creators of this country. Now, financial running, okay.
1 minute left. Just
blockchain offers a leapfrog pathway of financial inclusion. 1.4 billion adults remain unbanked globally, disproportionate Muslim majority region. The average remittance cost of the 6.2% is far above the SDG target of 3%. Blockchain can reduce this to near zero. And the projected Islamic fintech market, 300 billion by 2027. The solution are accessible via mobile phones with minimal infrastructure and making them ideal for local low-income population, South Asia, Sub-Saharan Africa, and other countries. So let me come to the conclusion. Policy recommendation. Quickly, based on my many years of research, I want to propose 6 policy perspectives. First, AOFI. I will sit on the AOFI board. It's a rule-setting board for the Islamic finance industry, and now we should develop unified Shariah standards specifically for digital assets. Second, more jurisdictions should establish regulatory sandbox following United Arab Emirates and Bahrain model. Third, Islamic financial institutions should implement the dual governance framework within joint SSB and technology oversight. Fourth, government should prioritize financial inclusion application, mobile fast payment, low cost remittance, and microfinance. And fifth, we must invest in digital financial literacy in these countries. And conclusion, can I say the conclusion? Okay. Let me conclude.
One sentence.
Let me conclude with this thought. The vision of an inclusive digital economy that harnesses blockchain and crypto innovation while remaining faithful to the Islamic ethical principle is not merely aspirational. The building blocks are already being assembled. Blockchain technology is jurisprudentially neutral. It is design that determines permissibility. Purpose-built Sharia ecosystem like HAC and MRHB prove that ethical crypto is possible. Tokenized sukuk and blockchain-based zakat are already transforming Islamic capital markets. And the dual governance framework that I talked about one of my recent working paper ensures both religious and technical rigor. The task ahead is to accelerate deployment with wisdom and rigor, and an unwavering commitment to the welfare of the global Muslim community and humanity at large. Thank you very much.
Thank you so much, Professor Akar. Thanks to all of our panelists. That's open for Q&A. I'll not take too much time. Sumejam, I'll bring you on. I'll just want to mention that this Ramadan, I received an email from non